the prompt. Perfect. Before we begin, I want to note the traditional territories of several Indigenous nations that Sheridan College's offices are located, which includes the Anishinaabe, the Haudenosaunee Confederacy, the Wendat, the Métis, and the Mississaugas of the Credit First Nation. These traditional territories are covered by the Dish with One Spoon Treaty and the Two Row Wampum Treaty. I am very grateful to have the opportunity to live, work, and learn on this wonderful land. And I'm also very grateful for all of the water around us. I came across an article that talks about how sacred and important the waters are to the Mississaugas and other Indigenous peoples throughout the world. So for me personally, I'm currently very close to the Credit River, which you can see on the screen. And I want everyone to join me on reflecting on bodies of water that are near you. It could be a river, a creek, a pond, a lake, whatever feels right. So I'm going to give it 1 or 2 seconds for you to think about a body of water that's near you. So now with this body of water in mind, reflect on your relationship with that water. Reflect on how much that water sustains us and all of the living beings around it. Reflect on how much rainwater is absorbed every day and how it helped drain storm water and ensure that the land is healthy and thriving. Reflect on how vital these bodies of water are to not only this ecosystem, but to all ecosystems. So I invite everyone to share in the chat a body of water that they are near today to move forward in reconnecting our relationships with the land. And if you are near the Credit River, you can use that example as well. Beautiful, thank you. John River, beautiful. Credit River, Rideau, beautiful, thank you. Cool. And please continue to share in the chat as well too. So Sheridan Edge is Sheridan College's social entrepreneurship hub where impact and entrepreneurship thrive. We are a vibrant community of people from all backgrounds and walks of life who believe entrepreneurship can make lasting changes in society. We support change makers as they explore entrepreneurial approaches to creating a more equitable and sustainable world. We help founders grow ideas and ventures that support a triple bottom line approach of people, planet, and profit. We offer mentorship, learning programs, and inclusive community, co-working spaces, and funding opportunities. We also connect Sheridan students to opportunities to learn and work with startups and collaborate with community partners to support impact entrepreneurs in the region. And something that's really exciting is that if you've been looking for affordable and centrally located co-working spaces in the heart of Mississauga, we have a co-working space, co-working membership starting as low as $100 a month. This includes hot desk access to our kitchenette with all day coffee and tea, meeting room time and discounts available, a business mailing address, and a lot more. We also have day passes available, and all of our plans are on month-to-month basis and are flexible for you and your teams. As a side note, if you are a Sheridan student, you also get free membership to Edge's Student Lounge, access to learning modules that are about entrepreneurship and change making. You'll also have access to staff advisors and a peer community as well. So if you are interested in the memberships, I am going to be putting it into the chat. And something that is also coming up is our other public sessions. So next week, we have our essential practices for successful entrepreneurs, leverage government grants for your startup, and accelerating growth through your strategic knowledge, which is our last public session. So if you are interested in those events, and if you want to learn more, I'll put the Eventbrite link into the chat. And another great way to start getting in the know of everything Edge, such as public events and other exciting news, please consider joining our socials. So we are on Twitter, Facebook, Instagram, LinkedIn, and we also have a website. We'd also like to make a special announcement on behalf of our colleagues at Sheridan College who are working with Colleges and Institutes Canada to promote a 50-30 challenge. The 50/30 Challenge is an initiative between the Government of Canada, Canadian businesses, and diversity organizations. The goal of the program is to challenge Canadian organizations to increase the representation and inclusion of diverse groups within their workplaces, while highlighting the benefits of giving all Canadians a seat at the table. So this includes founders, startups, and small businesses. So there are two goals that the 50/30 Challenge is asking organizations to aspire to. It is important to note that reaching this goal is not only about numerical representation, but sustained organization change where everything is equipped and has access and opportunity to grow and develop their talent to fill leadership and board positions, resulting in a stronger social and economic fabric and driving Canadian innovation. So the call to action is to make the pledge, which takes about 5 minutes to sign. From there, you can start to explore resources, including a toolkit, which is a comprehensive collection of equity, diversity, and inclusion resources to help you work towards gender parity and significant representation of equity, diversity, equity deserving groups in leadership and on boards. So if you are wanting to do the pledge and look into the Loot toolkit, here is the links into the chat. So if you need more information, you can contact EDI at collegesinstitutes.ca for consultation, coaching, mentorship, and or connect about next steps. And last but definitely not least is why you're all here. So Aziz is our wonderful facilitator for tonight. Aziz is a senior account manager at Owner. He has worked with thousands of entrepreneurs to help them navigate legal concepts, structures, and how to use technology to automate more of their startup process. It is Aziz's first session with Edge, but not his first time working with Sheridan. Previously running corporate partnerships for a large-scale paid internship program, Aziz has worked with Sheridan's grad students and newcomers, their career building workshops, networking events, and panel sessions. So if everyone can give a warm welcome, those little clapping hands to Aziz. Thank you so much for joining us today.
Thank you for having me. Hey, everyone. Good to be here to talk the exciting world of legal structures. Everyone is always just so fascinated and enthusiastic to talk about this stuff. So yeah, just super excited to be here. Hopefully this is a good session in that you know, you come away with something and you have a better understanding of you know, legal structures when you're thinking of starting a company. I know these are typically things that not a lot of us want to think about, right? When we have an idea and we want to get started, hit the market, start attracting investors, looking at who our customers are, research, building a foundation oftentimes falls to the wayside, right? And you're not really thinking about these things as you're getting started. So hopefully today we can position some very important pieces to help you get an understanding for what you will need for when you get to that point and you are ready to fully start up. So yeah, super excited to be here. I love also the land and in that water acknowledgement as well. I love all the Credit River shout outs are amazing. I grew up around Port Credit, so I'm very familiar with the river, and right now near High Park. So the pond is fantastic, and it's a really serene place to, you know, just to meditate and collect your thoughts. So that's fantastic. I love seeing that, and some amazing movie preferences here from everyone. So enough with introductions. Hopefully everyone's ready to get started here. I think just something to keep in mind here as we're going through what I'm covering might be familiar to some folks. Sometimes all of the subject matter will, I mean, I don't think all the subject matter will be. Sometimes none of the subject matter will be familiar. So understanding that there's a broad range of you know, knowledge levels that are coming into this presentation. And I'm pretty casual. I like to keep things casual. So feel free to ask questions. The chat is going to be a great way to do that. I'll make sure to take some pauses in between the presentation here so that we do have room for questions. Then at the end, we'll probably get to have some open discussion as well. So just something to keep in mind, feel free to use and abuse the chat function here as you have questions as we're going through. So we can get started here. I will quickly share my screen here. And we'll get right into this. So what we're going to talk about today are a few basics. We're not going to get into like the depths of like legal templates and what an NDA should look like and what an intellectual property agreement should look like between founders and any of that stuff. We're going to take a look at some basics. We're going to take a look at the foundation for when you're thinking about creating a company, things that you should be focused on and thinking about. So initially, we're going to go through and look at some different business structures and options that exist for entrepreneurs as they're starting their company. Naturally, we're going to take a look at incorporation and how that process works. Obviously, like it was very quickly mentioned, but I'm on the owner team here. So I work with entrepreneurs on a day-to-day basis to help them understand this stuff. So we'll take a quick look at how to do this on owner and how to use technology to go through a process that otherwise was either very risky, confusing, or just very expensive to do. And then we'll look at some operations and some ongoing compliance pieces that are important to think about when you're running a business. And of course, just finishing off with resources, things that are going to make all this, easier as you're setting up. So, without further ado, let's get right into it. So, what we're going to focus on here in terms of the business structure side of things are three main business structures that you have options for. So, we're going to take a look at sole proprietorships first. We're going to quickly look at partnerships and then take a look at corporations. From my guess, a lot of it, there might be interest in all of these. Corporations are going to take up a large part of this. A lot of founders, obviously, as they're getting started, they're thinking of taking that very formal step and incorporating their business. But before getting into that, let's understand sort of what the differences are, right? So let's start with a sole proprietorship. A sole proprietorship, from a legal perspective, is essentially something that is very simple to set up. Doesn't cost a lot of money. There's not a lot of paperwork involved in the setup of a sole proprietorship, and is very useful for individuals who are just starting their business out, want to maybe test run an idea. Maybe they have something casual they're working on for 5 to 10 hours of the week, and they're just interested in kind of getting started slowly. From a legal perspective, a sole proprietorship in the business itself and the owner of that business, they're intrinsically tied together. So with that, the advantage is that there isn't any additional paperwork. There's no separate taxes. It's a very simple registration. But there are some negatives to that as well when we're thinking about sort of as we're starting to grow our business. So sometimes people, when they're considering a sole proprietorships, they're setting up a sole proprietorship, they're really thinking about, okay, now that this is connected to me, that there's no difference. Aziz, the person, and let's call it like Aziz's tees or something. I'm selling t-shirts. Those two things are one and the same. So there's no legal difference between us. So that means all of the personal liability that I have with the company is just falling back to me. So someone has an issue with my business and, God forbid, I'm taking a court or something like that. They're taking me to court as a person rather than a company. For that reason, also, people sometimes really weigh the options based on the revenue that they're expecting, because all of the revenue that's coming into my company as a sole proprietor is personal income, and I don't have any control over that. So for folks who are kind of starting out, aren't expecting too much revenue to begin with, don't have a lot of liability in their business, sole proprietorships are a great way to get going. And then for folks who have a more serious product in their hands, maybe they're going to be working with more sophisticated users, have greater liability, are expecting a decent amount of revenue. Sometimes sole proprietorships seem to be disadvantageous in comparison to corporations. And again, on any of these items, just keep questions in mind. We'll go through this stuff. But the next one that we can take a look at is partnerships. So with a partnership, what does this necessarily entail? With a partnership, the parameters around which we talked about a sole proprietorship. So there not being any legal separation, very easy to set up, minimal paperwork, no separate tax filings. It runs true for a partnership as well. The only difference is instead of there being one business owner, there's multiple business owners. So I think pretty standard and it's I think straightforward in its definitions as well. Sole proprietorship, meaning there's one proprietor of the business, and a general partnership means that there's partners, right? So we won't spend too much time on the partnership here, because again, inherently very similar to a sole proprietorship. You just have multiple people there. And this takes us to a corporation. So a corporation in its business structure is inherently much different than a sole proprietorship or than a partnership. when folks are thinking to incorporate their business, effectively what they're doing is they are thinking about creating a separate legal entity outside of themselves. So when I'm thinking of setting up Aziz's Teas and I'm thinking about setting it up as a corporation, in that thought process that I'm having about starting this company, the company doesn't exist yet. There's no framework for my business. There's nothing in place that necessarily is something that's sort of separate. I have maybe a company name as in Aziz's Teas that I'd like to try out. Other than that, I have nothing else. As I go through that incorporation process and I create this company, now I've separated myself from the business. So there's Aziz, the person, the human being, and then the corporation that I own and run and operate that is its own sort of standalone legal entity. So what this means for a lot of individuals who are starting their business out, there's some really big advantages to this. One, their liability is protected in a much greater sense. So no longer do I have personal liability for the business, rather, the corporation does. The tax structures that are available to me are a lot more preferential initially than in comparison if I were to do a sole proprietorship. So with a corporation, I can be creative with what happens with the revenue that's coming in, whether I pay myself a salary or declare dividends as a shareholder. And we'll take a look at some of these tax advantages in a sec, but I have greater flexibility around what I do with the revenue that's coming into my corporation and how I use it to grow my business out. It becomes also a lot easier for me to raise capital. Naturally, a lot of investors, financial institutions, governments that are giving or providing grants to business owners, a lot of the times they're reserving those things for corporations because they view it as a lot lower of a risk than to kind of go through that process with a sole proprietor, who's basically just a person that has a company name that they're operating. The ownership is also transferable. So I think very simply, one of almost the foundational goals of even a capitalist system is start a business, grow the business, sell the business, right? And a corporation allows you to actually do that and to really benefit and profit off of a business doing well and potentially selling the ownership in that business to set yourself up for retirement or the next venture or whatever that might look like. And that's possible with a corporation where it's not with a sole proprietorship. Some of the disadvantages, of course, it's not just all advantage. There are some disadvantages and some things to consider. So there's a greater cost, whether it's to start and incorporate, but also just to manage the corporation on an ongoing basis. Think, accounting fees, think just maintenance for the corporation, upkeeping documents, that sort of stuff. You are required to file separate taxes. So corporations, and we'll take a look at some of these requirements, but corporations are required to file a tax return and an annual legal return that are outside of just your own tax returns that you're filing as an individual. And there's ongoing paperwork, albeit minimal. It's still something that you have to keep in mind. So a good way to think about this, because there are so many advantages that corporations provide to business owners, those advantages need to be upheld and they need to be maintained. So of course, it would be, I think, irrational to think, hey, this thing that's giving me a lot of advantage, I'm not going to take care of it at all and I'm not going to maintain it. There has to be some annual maintenance that comes in there. So those are the three structures that we're going to take a look at, or really we're going to focus on corporations here, but those are the three structures that generally people focus on when they're first starting a business. And again, we can take a look if there's any questions or anything. You can let me know, but initially here we can take a look at now, when is the right time for someone to incorporate? We see this on owner a lot, whether it's someone who has started with a sole proprietorship and then wants to take that leap and incorporate their business, or someone who has a business idea and product in their hands that it might make sense right away to incorporate. There's two primary reasons that folks will look to incorporate, and then there's some sub reasons that make sense for it to incorporate. We covered this right now, but just kind of think of it this way: is that liability and taxes are always a driving factor. The more liability that the company has, the more revenue you're anticipating, generally the more sense it makes to incorporate the business. Underneath that, I think that there's sort of these common reasons that people look at, but underneath them, there's some sort of more day-to-day and even operational reasons. So for example, with Aziz's Teas, I might not have a lot of liability, right? I might have evaluated this risk. My t-shirts are well made. I don't use any sort of chemicals, anything like that. I have very low liability. I'm producing them, whatever. And I'm not expecting a lot of revenue. I might still think about incorporating because maybe I have a connection with, let's say, a school board who has offered, a contract for me to create the t-shirts for their sports clubs. this might be a really good indicator that I should incorporate, because very likely that school board isn't going to offer this contract to a sole proprietor. So usually people are looking at liability and taxes, but it's also the ability to take on more contracts, do more work, open yourself up for funding opportunities, whether through investment, loans, or grants through the government. All really, really good reasons to think about that incorporation. So we have some questions here, and I can take a pause here, but recommend sole proprietorship for professional services like a CPA or digital marketer. And it's a great question. Digital marketer, you wouldn't necessarily think of as a professional service, but I think you can run both. But I think part of what we're going to do here, and you'll notice, is unfortunately I can't provide like that direct advice. So I can't say a DT, yes, be a sole proprietor or be incorporated. What we're going to do here is take a look at some of the common sort of benefits, advantages, disadvantages of this stuff, helping you make that decision. And we have tons of great resources that we can share afterwards that can kind of help you navigate that. And there are structures apart from these three. We're taking a look at some of these basic ones, but think nonprofits, charities, right? There are other businesses that you could be running. We're here more so talking about sort of, as entrepreneurs are getting started, mainly with private businesses, what they're setting up. And you can incorporate a business starting with zero revenue, right? So a lot of people we see on the platform will incorporate as they're developing their MVP, as they're doing research on their customers and their clients. They want to have a corporation in place to give themselves some validity so that as they are seeking investment and growing the product out, there's already something in place there. So hope that helps. Aditi, thank you for the questions. We'll move on here. This is a bit of a liability sort of wave that we have. We don't need to spend too much time here, but I think you can kind of understand here, like on the lower end here of like in terms of like marketing consultants, people that do mainly like digital work, not a lot of like physical liability and damages that occur, all the way up to like home renovation services, construction, these types of things. They're usually looking at more of that liability. From a tax perspective, mainly people are looking at the lower corporate tax rate that exists for corporations. So us as individuals, right? If I, let's say, generate $15,000, $20,000 of revenue with my company, that's not a huge hit. If that's the only revenue that I'm making, I'm pretty comfortable with that when it comes to taxes. If I'm a sole proprietor and my t-shirt business does so well that I generate $100,000 in revenue, suddenly my personal tax rate is pretty high there. So I might look to incorporate to benefit from a lower corporate tax rate, maybe pay myself through dividends, which are taxed much more favorably than just taking it in all as personal income. I can still decide to pay myself a salary, but I can kind of navigate and be creative around that. I also have the ability, to benefit from a capital gains exemption. If I do sell my company later on, I could be exempt from paying tax on those pieces. This is sort of entering a bit more complexity here as things become actualized and there's context around what you're setting up. We really, really highly recommend having a conversation with an accounting professional to just better understand sort of, okay, at what points in the year I'm going to benefit from certain things, when should I be declaring dividends, how to kind of be creative with where that where the revenue and the capital in the business goes. But these are kind of some very basic things that people think about when they think about tax with their corporation. I think this is probably one of the more interesting pieces here for a lot of folks who are first starting their company. I know when I was first going through this process, not like myself as an entrepreneur, I'm kind of sitting there thinking like, well, I have a great idea. I know who my customers are. I know where I'm going to sell my product. Everything makes sense from that perspective. I don't know, running a business, I guess you fill some sort of government form out, you pay taxes, I guess the CRA is involved. I don't know, you probably just like sign up and then you have a registered business. There's a lot of, things that aren't clear in this process. And so this is a really good way to think about what that incorporation process looks like, because a lot of people don't necessarily understand that there's two sides of it. So one side of it is the actual government work that gets done. So when you're first incorporating, the first thing that you're doing is conducting a name search, seeing if you're the company that you want to run, and if you want to name it something, that name is even available, that no one else is using the name in your jurisdiction. You want to reserve that name. You want to file the actual incorporation with the government so that you get articles of incorporation, a business number. There's basically a document that says this corporation and a separate legal entity exists right? So that's one element of it. And a lot of people, a big misconception that people have, and a big mistake that a lot of people do, is they'll go directly to the government to incorporate their business. The government will approve the company, but then they don't ever end up actually organizing or formalizing the business, which really hinders their growth and scaling of the company as they move forward. And so what we mean by this is typically that first process that's handled by the government is always going to be completed. In the past, what folks have had to do is traditionally they've had to go to lawyers to get things like their corporate bylaws, all of their shareholder resolutions, their director resolutions, share issuances. And these are the things that actually help structure the company. Because, for example, if myself and Aditi are going into business and we're incorporating a company, and I've let the government know that I'm a director, that Aditi is also a director, where our company is located, government approves our corporation. And then 6 months down the road, we have an investor in front of us who really likes our product. We've developed an app, let's say. And then an investor wants to see more documents. They have sort of the articles in front of them. They can see that a company exists. But Aditi and myself need to be able to show this investor that we've issued shares correctly, that Aditi, let's say, owns 70% of the company and I own the remaining 30%. We need to be able to verify how much that ownership and those shares are worth, that we've both consented to being directors in the corporations, that we have bylaws in place that help us understand the governance of our corporation. People go without this stuff all the time, and it ends up really hindering, again, their growth and scaling of their business. Because once you realize that you don't have that and it's asked for, oftentimes it can be a little too late. So just keeping in mind that there are kind of two sides of this. Traditionally, lawyers handled the part two. We'll take a look at how you can use technology to do these other pieces. But I'd love to know here, because I think a lot of people end up having questions around sort of what the difference is here on this slide specifically, and with everything that I've kind of mentioned. Any questions on, I guess, like the differences between what you're responsible for doing with the government and then what your responsibility is otherwise? And if not, that's totally okay. Oh, DT, yes, my business partner. Please. Yeah, so the question is, can you use generic docs for every business? I think this is maybe too broad of a question. It really depends what docs, what business, like what are we talking about here? The reason that we've been able to automate a lot of the work that we've done and that traditionally like lawyers have done is for private corporations, the stuff doesn't change too much. Like a share issuance, the actual wording of an issuance that says Aziz, the record shareholder of 1,000 Class A shares, like those things, like the word shares doesn't change. Record shareholder, that terminology is not going to change. What does change, obviously, is the numbers and figures that are relevant to your business. So what we've done, and we'll take a look on owners, we help you kind of point out these areas and specify the custom pieces to your business, and then the documents therein. We're able to automate because they don't change much from corporation to corporation. That's with these, right? You have other things like an NDA or an intellectual property agreement or a shareholder agreement. That's going to be drastically different between business to business. So I hope that helps. Terry, this is a really good question. I think one that actually can be worthwhile surfacing even much earlier when we talk about sole proprietorships, corporations, partnerships. An LLC is a corporation. Effectively, it's an American term for a corporation. So LLC is a limited liability company or corporation, and effectively it exists in Canada as a corporation, but the term doesn't exist. They just use it in the States. So I hope that helps. A lot of people have that question, and then they'll have questions around also that like legal ending, Inc., Corp, Ltd, that stuff. We can take a look at that here as we go through the platform and look at some names as well for businesses. But so before we jump in here, I think something really important to look at is what are some things that you need to consider when you're incorporating. So first, it's going to be the name of the company. We talked about usually you're doing a search for the name and seeing if there's any available or already used names for the business. Typically, then you're also looking at, let me just move this, at your share structure. So how is this company created? What is the ownership structure of the business look like? Is there any flexibility for other investors to come in, for other shareholders to come in? Have I created effectively a groundwork and a foundation that's solid enough that it's going to allow me to correctly grow without impeding the existing owners of the corporation. When we jump into the part of like the owner demo and we take a look at how you're incorporating on owner, think of share structure and share classes almost as a build, like as floors of a building. So if your corporation is a building, you can think of share classes as floors that are going to have tenants residing in them. I think that's a really good analogy because a lot of people don't realize that when they are creating a share structure and issuing shares in their corporation, they're unaware that when they're putting all of their shareholders in one class or on one floor, any event that occurs to that floor, to that share class, affects everyone, all of the tenants of the floor. So when we think about things like declaring dividends in a corporation and profiting from your ownership in the corporation, these are important things to consider is how you're going to structure the company so that one, it doesn't impede other shareholders who are looking to declare dividends, but two, that you've given yourself enough flexibility that you can add people to the corporation. And after the structure, and that's one of those really good things to chat with an accountant about. They can kind of advise on the best way for you and your business to set this up initially. But then it's actually just dealing with who's in the company, right? So corporations, from a legal perspective, they're a standalone legal entity, like we said, and they have sort of 3 levels of individuals within them. So at the beginning, you have shareholders, you have owners of a corporation. The shareholders, typically they could be people, they can also be other companies. Shareholders would typically then decide and appoint a board of directors. Those directors are going to be the mind of your corporation, essentially. In the eyes of the government, the directors are the most important people in the corporation. In a lot of signing matters and things where decisions are getting made, the directors are the most important people in the corporation. So again, they're the mind, as I mentioned. And then directors would typically appoint officers. So officers are your more day-to-day managers. Think a president, a vice president, a secretary, a CEO. Those individuals are running and managing the corporation. They might have ownership as well. They might be directors. They might not. One common question that we get, because when you think of a corporation, you tend to think of the sort of broader group of individuals, right? A company that has 50 people in it and employees and all this other stuff. So one common question that we get is, can one person hold all these roles? And the answer is yes. So it's very common for someone first starting out and they're incorporating, very, very normal for them to be the one shareholder in the corporation, the only director in the corporation, and the president of that corporation. And I think it's something like 60% of private companies in Canada are a single person owned corporation. So very, very normal for folks to start that way, but even continue and grow their business still as a one person corporation. Now, everything that we've kind of talked about here in terms of the structures themselves, the process of searching a name, appointing people to certain roles, I think hopefully we'll get some context here when we take a look at how we're actually going to do this through owner and to use a technology to do this instead of, spending quite a bit of money on a lawyer to get this stuff done. So initially, when we come into the owner platform, we're going to say that we can kind of pick whether we have a new business or we're bringing an existing company onto owner. Today, we're going to focus on a new corporation. We're going to pick where we're located, and then that we're actually setting up, for the case of this, a corporation. This is super fun. So traditionally, like in Ontario, I think it's $15 or $20 where you pull up a nuance report. Nuance stands for new, updated, automated name search. And so what that does is it helps pull a report of existing businesses so that you have an understanding if you can use that business name. In owner, we've actually just completely removed that need to visit the government, pay them their fee, the government send you back the document. In real time, this actually lets us know of any company names that are being used. So for example, if I try Consulting Inc., it's not a surprise to me. There's an exact match for this name. Someone's already using Consulting Inc. out there. So, okay, great. I got to take another, maybe be a bit more distinctive. And try Consulting Sense. This is my report here. So here I'm actually able to see any existing company names. I can now use this to evaluate and say, okay, well, these are kind of different, but maybe a little too similar to what I'm doing. I'm going to try Consulting Sense Technologies. And initially here, I can see that this satisfies legal requirements. It's passed preliminary name search test. So for the most part, I'm good to go here. There isn't definitely another company that has this exact name, and there aren't any similarly named businesses. The ending that I pick here, we kind of reference this. It doesn't matter. There's not going to be any difference in terms of like operations, the tax structure, where and what this business does with the name that you sort of end it with here. You have to pick an ending as a corporation because that's what signifies that it is incorporated. But what you pick is entirely up to you. There's not going to be any sort of impact on the company itself based on that name. So let's say I'm going to say consulting sense. I'm just going to keep it as Inc. here. Once I click next here, I'm then asked to set up my account info. This just when you're ready to do this, if you're going through owner, it's just your personal account information, nothing to do with the company. And then we get into the meat and potatoes, everything that we kind of discussed here. So initially I'm taking a look through, where my company is registered. So whether I have a federal or provincially incorporated business, these things have very slight nuanced differences. We won't get too deep into it here because it can take us into like a whole other thing where we're talking about boring legal documents and stuff. I'd encourage everyone as you're going through the platform, you can create an account for free and you can read through the tooltips. We have a lot of video content that helps explain this stuff. But so you're navigating whether you're going to be registered with Corporations Canada on a federal level or the province of Ontario on a provincial level, of course, for folks who are in Ontario. And then the registered head office of the company. This can't be a PO box. That's the only rule that the government has. Otherwise, a physical address like a street address or a residential address, the address of an accelerator, an incubator, usually fine. The industry that the company is working in. So here I'm going to go with consulting because that's what I'm doing. A lot of folks try to find exactly what their industry is here. A lot of times that's not going to have like a perfect summary of exactly what you're doing. The most important thing here is pick whatever's closest to, understanding that mainly this is used as a statistical measure, and that business activities do change. So while I'm providing consulting services right now, I might bridge into the tech world or into internet services later on, and that's okay. Finally, in my corporate info, I'm picking my year end. So as a corporation, this is kind of one of the differences between the two structures. Us as people, and therefore sole proprietors, don't have an option. Our tax year, January to December, we have to file our taxes soon. If anyone, it's coming up, but in the springtime. Corporations, we get to decide this when we're incorporating. So traditionally, people will pick the most common dates people will pick is December because they just like to keep it clean and it's easy to remember. The year is coming up to an end. My company's fiscal year is coming up to an end, or a month that's just recently passed. So for example, we're in March right now. If I'm talking to an accountant about this and I'm asking them, hey, when's preferential, they're probably going to steer me away from April because that means my year end is coming up in a little over a month. What they might recommend is that I select February or January as my year end, which ultimately gives me almost a full year to file my first return and to think about these compliance requirements. So again, you can be strategic on this. Great to get advice from an accountant, but the two most common dates, year end or regular calendar year or a month that's recently passed. That's in the corporate information. I'm going to take a quick pause here. I see some questions. Aditi, yes, we help with name search. We looked at that just now. The definition of a Canadian resident, citizen or PR. You don't have to own the place whose address you put in the profile. We oftentimes see virtual mailbox providers used for this. We won't get too far into like who and what and where and like how and stuff, but there are virtual mailbox solutions as well that provide you with a physical address and they can provide like mail forwarding and stuff to be used as the head office address. And in terms of services, that's a tough question to answer. Like I said, their business activities do change as companies grow. It's important to weigh out how different are those business activities. If I'm a digital marketer and I start, providing construction services or like I'm doing like roofing work, I might think about running those as two separate companies. If I'm doing digital marketing services for 35, 40 hours of the week, and then the weekends I have some time, maybe 5-10 hours to do construction services, I might see that as too big of a risk. I won't necessarily want to jeopardize my digital marketing company by now taking on something that has much greater liability within it, like construction work. Really great questions, and I hope everyone's kind of picking up on these from Aditi because these are the most sort of like frequently asked questions that that we get on the platform. But after we set up the corporate info, we're going to confirm the name once more, so we can just skip over this. We're not going to spend too much time. And then all we're doing afterwards is just depicting who's in the company. So if we have business partners, we can say that we're running the company with others, and we'll be able to enter that information about the directors, the shareholders, the officers. The beauty of owner, though, is acknowledging that a lot of people are coming into this by themselves. So now instead of worrying about plugging yourself into these areas, letting the government know about this stuff, do I have the documents that validate my ownership? I can just select by myself. Click next. And you'll notice here that everything gets pre-populated. I'm the director in the company. I'm the president by default, and I've given myself 100% ownership. The ownership structure gets interesting, especially for tech startups where they are thinking about sort of scaling and growing their business. Sometimes folks will use this advanced mode to create additional share classes. So we talked about that structure initially. So it might be common where I'm starting up and I might have my class, I might have a DT's class as my other shareholder. I might have this class available for investors who are coming in. And then I might also set something up for my employees in the future, so that if I want to award them options in the company and really help me grow and reward them for the work that they've done, I can do that as well. So this is just an example of sometimes what companies who are expecting, to scale and to have that sort of rapid growth will think about setting up and being strategic around, so that they're not suffocating themselves and having ultimately, we'll see this sometimes where there's one share class and everyone's kind of sitting in it. It becomes tougher to issue shares to new investors and things like that. So just something to think about there, but that's basically what that mode is. On Owner, we offer two different plan types. So we're very unique in that this is a subscription service. We'll take a look at on the minute book plan side, what requirements corporations have and how this helps with sort of those annual, like the legal requirements annually. And then the managed corporation plan, if anyone's kind of thinking about that sort of rapid growth, bringing on investors, drafting up legal documents, that type of stuff, that plan is a fantastic option in comparison to going to lawyers, paying a lot of money. Most people usually will start on the basic plan, get themselves incorporated, and kind of see where things are going. That's the very, very, very basic rundown here on how to incorporate through Owner. I don't want to spend too much time with the platform, though. We're here to talk about just general business structures and like the legal side of things. If anyone has any questions here on the platform or about some of the pieces afterwards, feel free. But otherwise, we could probably just return here back to the deck. Cool. Okay, so now that we've looked at how to incorporate using Owner, let's take a look at what happens after incorporation. And this is, again, like whether you set up on Owner, whether you didn't set up on Owner, like these things ring true. So immediately after incorporation, what needs to happen? Step one is a business bank account needs to be created. So this is a legal requirement. One of the differences between sole proprietorships and corporations as well. Sole proprietors, there isn't a legal requirement to have a business bank account set up. So a lot of people view this as a benefit because they can just run their business through their personal banking, keep things together, and run the company in that way. A lot of sole proprietors do think about setting up a business bank account for two reasons. One, to keep things separate. So if you're like me, you'll never keep track of this stuff. And if it's in one place, it's just going to be a headache. So it's going to be valuable to keep it separate. And two, if you open a business bank account for a sole proprietorship, it does help you build business credit. So if it's something that you're building for towards the future, and you do know that you're going to incorporate later on, it could be helpful to have that business credit already built up because you've had some experience with a financial institution and a commercial account. But with corporations, it's legally required. And one of the first transactions that happens on that bank account, I think a lot of people initially think, yeah, of course, so my users can pay me and I can start, generating revenue. Well, the first transaction that's actually going to occur on that account is actually the purchase of the shares in the company. So with a corporation, as we've set up a new legal entity, it has to have some sort of owners, and that ownership comes in the form of shares or units of ownership. So what we're going through there in during the demo, we looked at who the shareholder is, how much of the company they own, how many shares there are, and how much they're worth. Ultimately, once the company is incorporated, that shareholder is now responsible for the purchase of those shares. So an owner, we look at, if it's a default, if you don't do anything to it, we issue 1,000 shares to the owner at $0.01 per share. Ultimately, it's $10. It's a nice nominal amount. It's easy to transfer. And it gives you the ability to, you have enough shares there where if you have another person coming in, you don't necessarily dilute your ownership too much. And then step 3 is consider registering for tax programs. So HST, payroll, import-export numbers, depending on what's relevant to your business. It's not a legal requirement to set up HST and GST up until the $30,000 mark of annual revenue. But a lot of people consider doing this early on to obtain tax credits. It just makes things a lot easier when you have it set up from the beginning, rather than having to backtrack with your accountant and figure out kind of what's going on there. But again, the legal requirement, that magic number is $30,000. So moving on to annual compliance, the responsibilities are going to differ based on the type of structure you picked, right? So with sole proprietorships, it's not a separate legal entity, so I don't have to file separate taxes. I don't have an annual legal return. I'm good. I file my personal taxes and all the revenue gets taxed as personal income. With a corporation, I have 2 returns that I have to file. So I have to file my tax return. My corporate tax return is a T2. The recommendation usually for most folks is to do this with an accountant. They're going to be able to advise on sort of best principles and different tax credits that you're eligible for. And then annual returns, sometimes called corporate returns or annual legal returns, also need to be filed with the jurisdiction that you're registered in. So whether you're registered provincially in Ontario or federally in Ontario and Canada, this would depend on who you're sending that return to. And in those returns, a lot of people have questions about this is, okay, why do you need this if I'm like submitting a tax return? Well, the annual returns are a bit different, where tax returns are about the finances, revenue, eligibility for tax credits, that kind of stuff. Annual legal returns are more so about giving the government understanding of your active status as a corporation. So acknowledging things like a shareholder meeting, whether or not it was had, whether or not an auditor was appointed, whether or not the address of the company has changed and directors were added. So this becomes much less so about finance and more so about, is the company still active? Is it doing its due diligence that it's supposed to be doing? On owner, this is part of that sort of basic plan that we offer, is the ability to file these returns. So it just makes that part easier, and it's on autopilot every year. But I think really important to know about this stuff, because these are also things that people sometimes don't pay attention to. The government is expecting them 60 days within your fiscal year end. And if they don't get that, they can dissolve the corporation without warning. This is the Canadian and Ontario government we're talking about here. They're not that efficient. It's not like on day 61, they're just like sweeping every corporation, but it's a compliance risk that you run. It's like your driver's license expiring, or any of these other forms where you could technically keep moving without it, but it's a huge risk that you run. And then we kind of went through this in terms of owner keeping you compliant. It's just preparing those resolutions and the returns. A lot of people initially, when you're thinking about shareholder meetings, auditor appointments, I don't want that to like scare anyone into thinking, okay, if I incorporate, I now have to have and run all of these things. The government is expecting you to do them, but there are a lot of instances where maybe one person is running the company, so they didn't have a shareholder meeting, it's just them. Maybe folks aren't going to appoint an auditor because it's expensive and time consuming, and they're just not in a point where it's necessarily required. So what we do help with, and if you were to go with a lawyer, probably pay a bit more money, is to actually generate resolutions around that to say, okay, an auditor wasn't appointed. Here's a formal waiving of a auditor appointment form, and we're attaching it to the return. And this is where we get into the weeds of kind of like boring documents, but hopefully the platform is helping everyone keep that stuff on autopilot. We don't need to go through this line by line. But there are compliance items for corporations that need to be acknowledged. So whether it's the anniversary of the corporation, or an address change, or a director change, someone being added, removed from the board or from the officers, there are always compliance requirements for all of these items. So one thing that we run into and we see a lot is corporations and business owners who have changes to make will update, let's say, a government registry, or they'll update their business partners, but they don't actually have any validation for the corporation to show this stuff. And so this is what I want everyone to think about here is a corporation, again, just going back to that original slide, it's a separate legal entity. Just because you own it, you run it, you maintain it and manage it, doesn't mean that it's now just, fully, you can do whatever you want with it, right? So it needs to adhere to certain principles. So for example, like an address change, you might think, well, I own this company, I can let the government know my address has changed, and great. However, you do need a resolution that, because you might have other business partners, and this is an entity that exists outside of all of you, you need to have sign off that this is correctly done, right? So that when you are attracting investors and you are growing the business, that financial institution, government, investor, VC, whoever, actually has a record of this, that they're not confused and seeing this as a big red flag. Hey, you couldn't even keep the most basic thing under wraps, like your address changing. you don't have proof of that, right? So just kind of keeping in mind that anytime that you're making an action item with the corporation or any of these things, it's really important to have these things completed. And all of this we help on owner, and typically folks or folks are spending arm and a leg with a lawyer to get it done. We've gone through quite a bit here. I know we're probably like coming up on time. Don't want to stand in the way of anyone's dinner or anything like that. We're kind of reaching the end of it here. We do have some resources that we can point towards. We have a promo code for Edge participants. I can leave it up here, but I'd love to know any final thoughts, questions, anything that people are interested in here. Look, couple here in the pool, but Aman, the question of having a joint venture would be where partners are, right? Not sure, maybe like if that's maybe oversimplifying it when you say where partners are, joint venture like between two individuals, like two shareholders. So if that's what you mean by partners, I think the term partner can be a little bit maybe too generic, because a partner is another owner, another potential director.
I believe the question was more on the app, where like you had like the myself and then partners. If say Amon had a joint venture, would that be where the
Yeah, and so that's what I mean. I think it's good to understand too, like the definitions. There's technically like there's no place for partner on a corporation. It's either you're a shareholder, a director, or an officer of the company. But absolutely, among the if you have a joint venture with a partner, that shareholder section ultimately is where they're going to end up going, and where you can determine that percentage and the split between you and your partner. Aditi, do you have to open an RBC bank account if you go through owner? So no, one of the biggest benefits, obviously, of us being owned by the bank and being a part of RBCX is the resources that we have for entrepreneurs, the tons of, like knowledge resources, blog content, videos, all the sort of stuff that comes with just having obviously the funding of the largest commercial bank. The biggest benefit, obviously, to people is that $300 cash back that they get if they're opening up a business bank account. There's a natural synergy between the bank and owner because of that last step we looked at, where you have to open up a business bank account for the corporation. However, we're not going to force you to bank with RBC. You have that choice. You can set up a bank account with any financial institution. We just kind of like to point to the benefits of doing so with Royal Bank. Yeah, Naman, I see. So partners as in companies. So you can do the same thing. I think actually we'll oops. Let me just super quickly just point to this section. So if I'm here and I'm looking at the ownership and I want to add a shareholder, I can just add a company as well. Sometimes people do this with like holding companies, or someone else has like buy-in in their corporation. So they'll create a company profile there. And the representative here is the most important thing. The email address is where all the documents are going to go to. But yeah, very, very simple. When you're adding another shareholder, they can be a person or a company. I hope that helps. What happens when you want to branch out to the US? Yeah, it's incorporating in that jurisdiction. It's also like when you speak about branching out, what does that mean, right? Like we have, for example, back to my example of Aziz's t-shirts. Once I incorporate that business, I can sell to people in the US. There's nothing that's going to say like you're only allowed to sell in Canada. I have to make sure that from a tax perspective, I have made my considerations, that I'm enrolled in the right CRA programs, that kind of stuff. There's nothing going to prevent me from that. If Aziz's Tees blows up to such an extent where I want to open up a storefront in Chicago, I have to incorporate in the state of Illinois, or I'm not even sure in the US like what the specifics are, but I have to then be registered in the US. But just because like my clients and I'm like doing like my product or service is being sold to the US, I don't necessarily have to incorporate in the region. So again, on these resources, I'd really just highlight to everyone here, as you're getting ready to go, obviously the benefit from Edge is the discount. So take a look through these things. I think Erica will be sure to share the deck as well, so people can kind of have a reference point. We do have another question here. So can my startup with no shareholders be considered a partnership? Well, if it's a partnership, it's not going to have shareholders. If you're alluding to that first thing where we looked at a sole proprietorship, partnership, and then corporation, a partnership is just going to have two partners who have this company name that they're using. So like from a terminology perspective, you wouldn't necessarily have shareholders in a partnership because shareholders are very specifically for incorporated business. Yeah, the blog and business guides are free, of course. I usually say like a bit of a joke because obviously we can't compete with Google, but in terms of like a Canadian context and stuff, that's actual resources that are easy to understand and digestible. I think Owners Help Center and blog in a lot of ways actually is better than Google. If you Google some of these resources, it's really easy to get American stuff, UK stuff, Australian things. If they are Canadian, if anyone's been on any of the government sites, God bless them. They obviously it's fantastic and it takes a lot of work to get to these points. But there's like 50 steps, 30 things you need to know before getting started. Like, so it can be pretty confusing. Whereas Owner's blog and Help Center and our YouTube channel covers a lot of these basics in hopefully a very digestible way. Aditi, thank you. The session's been fun and thank you for the questions. Maybe that's a good point to stop here. I don't know if there is anything else that anyone is interested in. I mentioned there, I think we'll obviously be able to share the deck in this presentation for folks who couldn't join as well. But any final thoughts here from anyone?
I have a question.
Yeah.
I was wondering if you can briefly just go over, I know it's like very short on time. You won't be able to get like too in depth into this. But if you can share something about charities versus non-for-profits, the benefits of doing a charity versus a non-for-profit.
That's a good question. It's something I don't want to necessarily sit and like grandstand about something I'm not like all that familiar with because we do a lot of our work on like the private side. I imagine like between the two from like a very like basic kind of surface item, like it's a lot of it is tax advantage to the structure that you're running. Then I think like it boils down a lot to tax and like what you kind of get back and what you're eligible for and things like that. In terms of like legal structure, I'm not all that familiar. I don't think the best person to ask. One thing that we see on our platform, sometimes people will set up social enterprises, which technically they're private corporations, but have a sort of social impact and social good that they're working on. And they can still set up as a corporation, as a private for-profit company, but that they sort of in effect have the social mandate to them. It's a little bit different, but in terms of like benefits, whether you should go charity or non-for-profit, again, I think a lot of it just has to do with tax. More than that, I don't want to mislead or misinform anyone on something that I'm not too familiar with.
Fair.
From the folks here, I guess, like, would you say that that's like a natural makeup? Is that there are quite a bit of people interested in sort of non-for-profit or charity work, or is there a mix?
Yeah, there's a mix. Definitely thinking. I think there's a couple of people that have been thinking about not-for-profit or social enterprises that you were talking about. But yeah, it's still in the mix.
Mm-hmm. Yeah, that's good. Good to know. Good to know. Yeah, and social enterprise. That is one of the better articles that the government has is on social enterprise and exactly like how it works and sort of like how to define yourself as a social enterprise. I think you can probably like Social Enterprise Corporations Canada or something on Google, and like it'll pull up some info on them as well. Yeah. Anything else from anyone, or Erica as well? Good question. Good stuff. I think I'm not mistaken, right, Erica? We can share the deck and stuff, and like everyone will have the info.
Yeah, the deck will be posted for SIC, will be posted on Google Classroom. But for Eventbrite, there was an email that was sent out, but after the session, another email will be sent out with the recording plus the materials. Awesome.
Well, yeah, that's it for me. I don't know if you have any sort of parting words. I had a fantastic time here. It was really good to chat with everyone. Thank you for those who had questions. It was fun. It was a good way to spend the evening.
Great. Thank you so much for coming. I appreciate you spending the night with us and giving out that information. I will be sharing my screen for feedback. So if everyone can please use the QR code to give us some feedback for tonight's session, that'd be very, very helpful. But again, thank you so much, Aziz, for a wonderful session.
Yeah. Oh, and sorry, Erica, maybe I should mention, I think we're going to provide a resource around some booking links. So a big part of what our team does is this type of session, but in a more sort of like one-on-one way. So if anyone is coming away with this, I know sometimes it's not like you don't want to ask questions with a large group or whatever, but if anyone's coming from this with more questions or wants to maybe dive into some more specifics, I'd encourage everyone to use that link and book some one-on-one time with us, where you can kind of we can get into more sort of nitty-gritty of things. I should have mentioned that before, so just wanted to leave with that.
Beautiful. No, that's great. Thank you so much. That actually will be very, very appreciated. Can you share the link at DT? As in like the form? The link for feedback.
I think
yes. Oh. The link for feedback. Yes, I can definitely give you the link. Oh. Okay, so working. 1 second. Yeah, so please fill out the session feedback form. It takes about a couple of minutes. Oh. Link. Advantage. There you go. Great. Again, thank you so much, Aziz. And then for SIC folks, if you can just stay behind for like 2 minutes just to go over reminders. But thank you again for everyone for joining tonight. I hope everyone has a good night.
Thanks, everyone. Talk to you soon. Thanks, Erica.
Thank you.